YouTube, what is going on, man? In this video, we're going to be breaking down the most powerful time frame in trading that no one seems to be talking about. This is the 12-hour time frame. Now, if you guys have followed me for a while, you would know how much I love talking about the 12-hour time frame. And the reason it's powerful is because each candle gives you instant bias every single day in the market based on whether it closes bullish or bearish. So if we take this structure that we have just drawn on the charts and go down into the lower time frames, you can see that from the 12-hour on the 15-minute, it is literally just price creating these structure points, these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Once the 12-hour closes bearish, we start to create then lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we start to flip bullish again, creating higher highs, higher lows, higher highs, higher lows, higher highs. And all you did to get this structure was go onto the 12-hour time frame, mark out the structure points, the highs and the lows, and you're able to get instant bias, instant direction, and instant market structure. What I want you guys to do now is go to the indicators section on TradingView in the top of your chart, search for sessions, and the one you want to add to your chart is this one right here by JR Effects Addict. Now here's where you can really start to see the magic of the 12-hour time frame. Now first of all, I want to break down why I believe the 12-hour is so powerful, and it starts with the daily time frame. One day I was sitting there and I was thinking, how can I break down the daily time frame? Because again, the daily time frame, the same as the 12-hour, is very powerful. You can capture a lot of momentum by analyzing the daily candles. So I sat there and I thought, how can I break this daily candle down? You know, I tried the 4-hour time frame, I tried 1 hour, I tried different time frames to try and break it down. And then I just had kind of a light bulb moment of, hang on a minute, what if we break down the daily time frame into 2 candles? The first 12-hour candle would cover Asian session and a little bit of London, and then the second 12-hour candle, which is the most important one, would then cover the rest of London, pre-New York and New York session. So the idea is that once this first 12-hour candle of the day closes, it's going to give you then instant bias for the second 12-hour candle to continue bullish or bearish during New York session. And let's just go through this section right here, which is obviously most recent price action. We always want to use most recent price action. And if we take a look at this 12-hour candle, now the reason I told you to put the sessions indicator on is because the sessions indicator highlights these areas, these 12-hour candles. The first 12-hour candle is going to be in this highlighted purple section, and the second 12-hour candle is going to be in the highlighted green section. In this example, we have a bullish first 12-hour candle of the day, and the second 12-hour candle continues bullish from open 127 pips. So within this 12-hour candle right here, with your strategy, you can just look at this previous one and say, okay, the previous 12-hour candle is bullish, so I'm only going to look for buys today. And then you can try to capture this momentum of that second 12-hour candle, whether it's in here on a pullback or whether it's on a break of the high and a continuation. Same exact scenario plays out here. The first 12-hour candle of the day closes bullish. The second 12-hour candle of the day continues bullish by 240 pips. If you have a solid strategy, there's definitely a chance you are capturing a move within this 12-hour candle to the upside for over 240 pips somewhere in here. In this example, we have a bearish first 12-hour candle of the day. And what happens? The second 12-hour candle of the day continues bearish from open over 160 pips. And same again, in this example, first 12-hour candle of the day closing bearish. Second 12-hour candle of the day does actually continue bearish momentarily for 180 pips before it then flips bullish and closes bullish, right? But you still are able to capture 180 pip move potentially to the downside within that wick right there on the lower time frames. And then again, price flips back to the upside. Your first 12-hour candle of the day closes bullish, and your second 12-hour candle of the day continues bullish by over 228 pips. I just want to make one thing clear before we move on. We're not trading every single 12-hour candle. The first 12-hour candle is only used for directional bias and analysis to trade the second 12-hour candle. We are not trading the first 12-hour candle based on the previous day's second 12-hour candle during Asian session. All right, we are not doing that. All right, moving on. So what I've done here is marked out the 12-hour highs based on whether that first 12-hour candle closed bullish or whether it closed bearish. And now we're going to go down to the lower time frames, and we're going to see how we can actually enter off of this analysis. analysis. All right, I've dropped down to the 30-minute time frame, and what I've done here is also marked out the lows. So we have 12-hour highs, 12-hour lows, and I've done this to show you how well the 12-hour candles cover the Asian London session range and give you that nice move for New York session. So let's break it down. Right here we can see that obviously the first example, the 12-hour close is bullish, meaning straight away during New York session, we have instant directional bias and we are looking for buys. So you might be thinking, Cody, that's all good and well, and we have directional bias, but how do we actually enter this? One way I like to use this strategy for entries is with breakouts, right? Because if you're thinking about the 12-hour candle giving you directional bias, and you know that New York session is high volume, especially for USD pairs and especially for gold here, we know that if we can break above these highs, once now this 12-hour candle has created a nice bottom wick, it's also tapped into the body of the lows right here, grabbing liquidity. And once we break out of here and we get a closure above, price could start flying to the upside, which is exactly what happens. And if we take a look, once price breaks out down here, look at this move to the upside. Let's have a look how this would have played out in real time. Now, just as I mentioned previously, the entry criteria for this trade is to wait for a 30-minute candle closure above, which we have had right here. Secondly, we want to wait for some clean price action. And what I mean by that is we need to wait for this new 30-minute candle to come down and create a bottom wick, right? This is clean price action. If we take a look at most of the candles, I would say 95% of the candles on the chart at any given time, they will have a top or bottom wick. And what you want to see with this new candle is it drive down a little bit into this area, create a bottom wick, and then start to flip bullish and break the previous 30-minute highs over here, which would then give us an entry and price to drive to the upside. Let's play it out. There we go. Bottom wick formed, right? Tap into that area. That's beautiful. So it's kind of a break and a retest. And now we're approaching the previous highs. So what I would do at this point is have a buy stop a few pips above that 30-minute candle high, right? That's very important, just so we don't get triggered due to high spreads. Have our stop loss below that breakout candle low by a few pips. You can still target your 1-to-1, 1-to-1.5, or a 1-to-2, whatever you want to do. In this case, we'll play it out and target this structure over here to the left, which is close to a 1-to-2. Let's see what happens. So we're pushing up very nice. What is that? About 72 or so pips profit from that initial push. Price is pulling back. And at this point, what I would do right here is move stops to break even. Because the last thing that you want is to be 70, 80 pips in profit and then price to come back down and hit your stop loss, right? You do not want that. Let's see how the rest of this trade plays out. If we can get that 1-to-2 for about 160 pips. So you can see you're sitting in this trade. It's consolidating a little bit. You're in profit. And this is where you would have to practice patience, right? You need patience for this and to just let the trade play out. Trust the analysis, not over trading. Oh, we're getting some volume here. This is during Asian session. And there we go. We spike up and we tap into that area at the top that marked out previously, this resistance over here, and hits a 1-to-2 risk to reward ratio for 160 pips. Moving on to the next day. And I just want to point out that these examples I'm showing you are literally one day after another, just showing that this 12-hour model gives you analysis and setups potentially every single day. So again, the first 12-hour candle of the day closes bullish. The second 12-hour candle of the day continues bullish, and where we can look for entries here. Now, this one is a little bit different to the first one, is once price breaks out, we don't get a breakout entry right here, okay? Because this candle does not break the breakout candle highs and continue. It closes bearish, so there is no entry right here. This is an invalid entry. But once price comes back down and retests this during New York session open, there's some chances for entry in here, and I'll show you how. Now, a way we could get an entry in here is with V5 Algo Pro. And just like that, we get a 30-minute buy signal after the break and retest. Price is pushing to the upside. We have over here in the top right, 2 of the time frames, bullish, daily and 4-hour, giving us more confluence. And now we have a signal with entry, stop loss, take profit 1 and take profit 2 levels on our chart right here, making this very seamless and simple. So next, we enter the trade and we put buy stops in. We can see the actual entry is 264944, which is a few pips above that previous candle high. We put our stop loss at 264012, and we either set a 1-to-1 or a 1-to-2, but we can also target a level of structure as well, which I like to do. And if we have a look over here to the left, price is pushing up into this area over here, right? We can see all of the structure in this area. Resistance over here, support, support, resistance. Okay, resistance again. So we know that if price comes up into this area, there's a likelihood that it's going to reject just like it has done previously. Let's play this trade out. Go, we reject, grab liquidity over here from this 30-minute candle, and we start pushing to the upside. Now you can see as soon as price tapped into that area, we started to reject there, right? That is why we mark out these levels. They're very important. Take profit, got hit right there for 138 pips. All right, I'm going to speed things up a little bit now because I don't want this video to be too long. I want it to be straight to the point. I want it to be educational, and I want you guys to be able to take the info straight away and apply it. Let's take a look at the other examples. And with this example now, we have the bearish 12-hour candle, and we can see that once price comes up, retest this previous 12-hour high, it starts selling off to the downside. And again, breakout trades. Right here, we have the 30-minute closure below, and price then starts selling off to the downside. Entry a few pips below that breakout candle low. You'll stop here and you can target a 1-to-1 or a 1-to-2, a previous level of structure, which could be these potential previous 12-hour highs over here, which price rejects, obviously. So you get about a 1-to-1 there for just over 100 pips, right? And you've literally, all you did is follow the bearish 12-hour bias, look for a breakout, look for the bearish momentum to continue, and you capture over 100 pips there and beyond. Really, if you held that a little bit longer, you get a 1-to-2 for like almost 200 pips. In this example, it's slightly different, right? Because it is a bearish 12-hour candle, and although it does continue bearish below those 12-hour lows and you do get an entry, what happens here is very interesting, because as this 12-hour candle closes, price comes up and spikes out of those 12-hour highs, and then from there absolutely dumps to the downside. So this acts almost as a resistance, and once you see these rejection wicks, you can perhaps, based on your strategy, look for an entry in here for price to continue selling off. Based on the previous 12-hour candle being bearish, you can anticipate that bearish move. And lastly, we have the first 12-hour candle of the day bullish, so you're anticipating buys once this 12-hour candle closes. And again, breakout candle, closure above on the 30-minute time frame. Your entry would be a few pips above that breakout candle high, stop loss a few pips below, and again target your 1-to-1, 1-to-1.5, or a 1-to-2, or a previous level of structure like this over here from the previous 12-hour high up there. Price rejects that and sells off from that level, but you do get, once price taps into there, you do get about a 1-to-2, a risk reward ratio for over 100 pips there. All we're doing for all of these trades is just following the 12-hour closure momentum. So that concludes the 12-hour directional bias video. And if you guys made it this far, I want you to comment "I'm here" down below, just so I know you watched the video to the end and you are a dedicated trader looking to improve your trading. All that's left for you to do now is head over to TradingView, go into the top over here to your time frames, click the drop down arrow, click add custom interval, and what you want to do is change type to hours and put 12, add it to your custom interval time frames. Once you do that, go to the 12-hour time frame and back test. Mark out your 12-hour highs and 12-hour lows, and if it's bullish, look for buys. If it's bearish, look for sells on the 30-minute time frame. That's it. It's very simple. If you guys want access to V5 Algo Pro Indicator, which is going to help you with the entries for this strategy, the link will be down below. Thank you guys for watching, and I'll see you in the next video.